The Australian Financial Review.
Hello, I'm James Thompson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague. The hot air he produces will always be vital to the national interest. It's Anthony McDonald. How are you, Anthony?
Feeling some fertile topics to discuss today, James.
Fantastic. Well, this week we try and make sense of the conflict between Israel and Iran. We explain why the biggest cash takeover in Australian history is a massive test for Jim Chalmers. And we ask, do our big CEOs ever miss out on a bonus? Well, Anthony, let's start there. This week, the Australian Council of Superannuation Investors, which is sort of like a proxy advisory firm for the super sector, put out its annual review of CEO pay, and it's safe to say the bosses are still doing all right. With the median pay of CEOs in the ASX 100 sitting at $4.15 million, which I think is just above your wage, Anthony. But there's a sliver of solace for the ordinary Australian. That median CEO pay is now 55 times the earnings of an average worker, which is down from 71 times in 2014, and it's well below what's happening in the USA, where CEO pay is 348 times the average Gianni or Gina's wage. Anthony, are there any other trends in this CEO's pay survey that you'd like to point us to?
The golden rule to the big bucks, James, and I mean the big bucks, it's pretty simple, isn't it? You just have to run an ASX-listed business that is big offshore.
Yes.
If you can convince your board to compare your salary to peers or competitors in the US, James, you are laughing. So the top paid CEOs, in order, they're all the companies that have these big US businesses. We've got Robert Thompson from News Limited. They've obviously got Dow Jones over there, the publishing assets offshore. Levisa's Victor Herrero, offshore expansion story. Macquarie's Shamara Wickramanayake. You know, a cool $30 million realised pay this financial year. She's got a big global asset manager, big trading house, you know, competes with all the banks on Wall Street. You got Goodman's Greg Goodman, global logistics player. Mick Farrell from their ResMed. He's even based in the US. Mike Henry from BHP and Yakov from Rio Tinto. Big global miners. It's pretty simple, James, isn't it? You just got to have a company that competes globally where you can get compared to CEOs in the US and you make the big bucks. But I think the thing that's worth looking at this year, James, is the amount of CEOs that get bonuses. And you pointed this out to me. Of the 142 CEOs eligible for bonuses, only 5 got a donut. Only 5 out of 142 got 0. So spare a thought for them, James.
They must have really done something wrong. Now, Anthony, the first question that comes to my mind is, do you happen to know what columnists are paid in America? Because that could help us.
100%.
The second question is, what do you have to do to get no bonus? I mean, were these really the laggards of the ASX?
Yeah, laggards of the ASX, or the ones that had particularly troublesome years. I mean, one that caught my eye was Lendlease's Tony Lombardo. Poor bloke. I mean, he had activists up his wazoo all year as well. So, yeah, I think you basically just had to have had a shocker. Or, I mean, all the criteria for their bonuses are laid out. Investors can read them in the remuneration report. It's generally around total shareholder return, you know, the earnings of the company and those sort of things. But, James, honestly, I mean, CEOs get paid a lot compared to the ordinary person, don't they? And I'm not sure you could ever say that one person's worth 55 times than another. But, I mean, I tell you what, I mean, most of the CEOs we come across, they do work bloody hard. I mean, they are addicted to their jobs. They don't really get much time away, and they've all done years and years of dedicated service to get to where they are. But it's just astounding how those US sort of facing companies just continue to get paid so much more than the rest.
Yeah. Is it a surprise then that we don't see too many CEOs make the jump from running Australian companies to US companies? I guess it's probably hard to break into that US market. You know, there's only so many CEO jobs, even in a big market like that.
Yeah, exactly. Yeah, I don't think there's too many Aussies running US businesses, although there are a few. And likewise, James, it's interesting that you get the US CEOs that will come here and run businesses as well. We see them pop up from time to time. So there is a bit of border jumping that goes on. But 100%, if you were doing really well running an Australian business, surely you'd be looking at what's going on in the US and say, hello, I'd like some of that.
Yeah, absolutely.
And James, speaking of pay, I couldn't believe my eyes when I saw that Meta Platforms, which owns Facebook and WhatsApp and Instagram, is offering sign-on bonuses of $150 million to AI engineers. Seriously, who should earn that sort of money?
Oh, come on, Anthony. I mean, we see soccer players and baseball stars and basketball stars traded for that sort of coin all the time. I mean, hey, we're always saying that, we undervalue science compared to sport. So here's an example where we're not doing that and everyone's up in arms. I reckon there's a bit of double standards here. Look, it's a lot of money though. But why would you pay someone that sort of money? The reason you pay someone that sort of money if you Meta Platforms is because you think getting their skills on board is going to make you an extraordinary amount of money in return. So if Meta Platforms is hiring AI engineers for $150 million, if they're looking to spend, I think it's about $100 billion on AI infrastructure just this year alone, I mean, the pie that they're chasing has to be in the trillions of dollars, doesn't it?
It sure does, James, but it worries me as consumers of all these products. Like, how much are we going to be paying for them? If they can afford to be paying people $150 million sign-on bonuses, what are they going to be selling their AI products for? They will be milking customers.
I think your worry is right. I mean, and I've said this before, if AI is to deliver these trillion-dollar returns that everybody's betting they will, and everybody includes everyone who has a super fund account, we're all up to the wazoo, to use your phrase, in AI stocks through our super. So how do those trillion-dollar returns come through? They come through if the customers of these AI giants are prepared to pay big money to use the AI services. What are those services, Anthony? It's imagine AI agents replacing your entire call center, or imagine AI agents that could, inside a bank, process loan documents and give loan approvals even. Now, why would the customers of the AI giants be prepared to pay to use these services? Because they know they can make more profit in turn. How do they make more profit in turn? By reducing their biggest cost, people. So I think you've got to connect these two things. The reason someone is prepared to pay a $150 million sign-on bonus for an AI engineer is because somewhere down the track, they think there's a big saving going to be had from taking out lots of people inside a business. I mean, I've said this before, the only way AI delivers returns is through unemployment. It is an ugly, ugly, ugly truth, but there it is. We can't sort of ignore it. Am I wrong, Anthony? Am I getting too doomy again?
It's a pretty doomy thought, isn't it? To think that one person collects $150 million and their job is to put how many other people out of a job.
Yeah.
But I mean, I guess that's the way this is all going.
Yeah, absolutely. Okay, Anthony, let's move to frankly, equally glum first topic. And that's this week's news, which has been dominated by the latest tragic conflict in the Middle East between Israel and Iran, which appears to be turning, really increasingly nasty, particularly for the civilians who are caught up in it. Anthony, as we record on Friday morning, things are sort of on a bit of a knife edge, with the world still waiting to see whether Donald Trump will lead America into the conflict. Now, Anthony, Donald Trump initially sort of distanced himself from these Israeli attacks, but now he seems to want in on them. He's saying we could attack any time in the next 2 weeks. What do you think's changed in the sort of American view of this conflict?
Yeah, James, big week for the world this week. I mean, it's not a market story, it's human story, isn't it? Years of history and tensions boiling over. What changed this week, James, was the bombing obviously intensified. It's up to 7 or 8 days now. And the Israelis targeting key bits of infrastructure around Iran's nuclear program and key military officials. Iran seems to be doing what it can to stay in the game and say it won't surrender. But what changed the US? Just beefing up its presence, beefing up its forces in the region, James. Like it sent a third US Navy destroyer into the eastern Mediterranean Sea, and a second US carrier is heading over to the Arabian Sea. It's just emerged that President Trump has sort of privately approved these Israel's attack plans. It's raising the question of, is the US about to join or not? You know, it's been a will he or won't he sort of story all week, James. I mean, Trump's playing along. He literally told reporters in the White House on Wednesday, I may do it, I may not do it. I mean, nobody knows what I'm going to do, right? And then this morning we wake up to this whole I might do it in the next 2 weeks. I've got a 2-week sort of time frame thing, and it's pretty astonishing. I'm not sure we've seen too much like this, have we, James?
No, that's right. I think what Trump is probably sensing is that, America and Iran have been at loggerheads, at tension over the Iranian nuclear program for a long time. And I think Trump's good at seeing someone's weakness. He loves this master negotiator stuff. And he can see as Iran is sort of down for the count here. Is this the chance to finally take that Iranian nuclear question off the table once and for all? So I think that's where he's going. But yeah, the whole... I could do anything in the next 2 weeks. I mean, we know that, Donald. You could do anything at any time. We've seen that in the last few months. So he's a master showman, if nothing else.
James, I wanted to bring a reader question in here, and we've got a marvellous one from Victoria Reid, who's the sister of our economics correspondent, Mike Reid.
Hey.
She'd sent in a question in the hope of going to the top of the family leaderboard for the most impressive Reid child. And the fact she's made it to the Chanticleer podcast, I think she now is, James.
Oh.
Her question also gets right to the heart of the market's response on this.
Hi, Chooks. Oil markets have shot up off the back of the Iran-Israel conflict due to Iran's role in global oil supply. If supply continues to be impeded, how can we expect global markets to respond? Can other OPEC nations and the US increase their supply easily? And what are the flow-on effects of oil price increases into other markets and economies? Thanks.
Well, the first thing I've got to say is how good would Christmas at the Reids be? I don't know if we'd be able to keep up with the conversation around the table. But it's a great question, Victoria. I mean, oil is at the heart of the market's response. We've seen oil's been funny this year. It's gone from about $80 US a barrel in January down to $55 US a barrel in May, which we all saw at the petrol bowser, some comparatively cheap fuel. After this, it's shot back up to around between $75 and $80 a barrel. So these aren't crazy prices. This isn't a massive spike. But I think the longer this drags on, the more worried we are that we could see the next set of actions that pushes oil up towards US $120 a barrel. What would need to happen? Well, it's not so much about the oil that Iran produces. That's only about 1% of world supply. What everybody's worried about is that Iran might close the Strait of Hormuz, which is key waterway in the Middle East through which about 20% of the world's oils flows. So, if we see attacks on ships in that strait, if we see a mining of the strait, sea mines, if we see general sort of blockades of the strait, then that would take out a lot of oil, and we could see oil go up to $120. So, it's a possibility. That would have big flow-on effects for markets. There'd be a panic on Wall Street and probably on the ASX. Those panics tend to fade pretty quickly. Global economy is not as reliant on oil as it was, say, back in the 1970s when we had a famous oil shock. So, it's not probably not the end of the world, but it would be a sort of nasty moment, particularly given that markets are stretched, they're expensive, they're overcrowded at the moment. So, you want to watch for that. So what we've got, though, Anthony, is a whole lot of armchair generals, strategists trying to figure out how likely it is that Iran takes that sort of action. Does Iran get pushed into a corner where they feel they need to do some real damage to the global energy complex to get everyone's attention and calm this down? Not sure. Blocking that strait is something they haven't tried in 50 years. And imagine the reaction if they do try and do that. Attacks on US ships in that area, for example, could be the trigger that really brings the US in to sort of wipe Iran off the map. So there's so many combinations and permutations here. But the question is, does Iran do something to disrupt the broader Middle East energy complex? We haven't seen it yet. I think if we avoid that, then oil and markets will be okay. If we do see them take that step, then we could see a sort of short-term shock to markets that would be pretty unpleasant. But Anthony, the other thing that was happening as all this was unfolding was the G7 in Canada. Now, Anthony Albanese trooped over there. He's not. Australia's not in the G7. We're on the periphery. We're a friend of the family, so to speak. And he was all set to have this big meeting with Donald Trump. But then, of course, the Donald decided he had to leave the G7 early before Albanese could meet with Trump. Who's the bigger loser here? Is Albo upset that he's missed the Donald, or is the Donald upset that he's missed Albo?
I doubt Trump's thought about it again, James. To be honest, yeah, it's a blow for Anthony Albanese, absolutely. Like him or lump him, President Trump is the most powerful leader in the world. He's the head of the world's biggest economy, hugely important. You know, Australian Anthony Albanese don't have to necessarily like President Trump, don't have to like his politics, but I think it's pretty important we get in front of him, James. And since Trump was re-inaugurated in late January, I mean, he's been met with a procession of leaders who have been making their way to the White House to congratulate him and ask for stuff, and that stuff's usually to go easy on tariffs. Albanese hasn't made the trip and was hoping to get the job done with a meeting on the sidelines of this G7 summit, like you said, James, in Canada this week. You know, they're both there, was looking all good, and then Donald walked out like Don Bradman at the Oval in 1948, James, when he needed 4 runs to average 100 and he got a duck. So Donald Trump, he was out of there, back home to deal with the Middle East. And he's clearly not a work from anywhere guy, Donald Trump, James. But our top reporter in Canberra, Phil Courier, I thought he's been in Canada too on the trip. So you can imagine the disappointment if you're a reporter on that trip. But I thought he put it nicely, James. So he said meeting Trump has become the box that Albanese needs to tick. And you know, sure, Albanese got to meet a couple of other people while he was over there, including your man, Scott Bessent, who's the Treasury Secretary. But it's just not the same, is it? You know, you're running the country, you're representing Australia. It's your job to get in front of these leaders, and I think he's just got to get it done.
There is a sort of pressing issue. The great tariff pause ends on July 8.
That's right. It's just around the corner, but Bessent has flagged the deadline will be extended for those nations currently in negotiations. So Albanese, he's got a little room to move, but James, I'm wondering, why doesn't Albanese just go and knock on the White House door?
Well, Anthony, maybe Albo's worried he's going to get a President Zelensky moment. You know, he's going to have JD Vance yelling at him, or there was that South African president who also got the sort of rounds of the White House kitchen. So maybe Albo's a bit sensitive. He doesn't want to be yelled at by Trump and Vance.
Either way, James, I think Albo's just got to tear the Band-Aid off and get this meeting done.
Yeah.
But just quickly, James, while Albo was in Canada, Federal Treasurer Jim Chalmers, he was in Canberra giving a big set speech on the government's economic agenda. What did you take from that?
Oh, it was a love letter to the AFR. How many times do you reckon the word productivity was mentioned?
How many?
28. Ooh, what a beautiful thing.
Good.
You know, I could feel Michael Stutchbury, our former editor-in-chief, great productivity campaigner. He would have been drooling over this one. Now, have a read of the paper on Saturday. I'm sure he'll take some issue with Chalmers' approach. But look, we're gearing up for this productivity roundtable, which will be held around the apparently around the cabinet table, Anthony. 25 seats around the cabinet table, so I'm not sure you and I will be invited, but I think we'd have a bit to contribute. Look, I mean, the headline here was about tax reform.
Yeah.
Chalmers has said, bring it on, I'm ready to discuss it. He even gave a little message to the media, gave a message to you, Anthony. He said, don't play the rule in this tax change and rule out that tax change. But then Chalmers strangely went and said, I'm not going to touch the GST. So,
hey, only one person can play that game.
Exactly. What a reverse ferret. So, look, I mean, we'll see where all this goes. But, you know, hey, kudos to Chalmers. They've got a mandate. We've said, what are you going to do with this mandate? Can you do some big picture stuff? And Chalmers has, you know, provided a speech that said, yeah, let's talk about it. Let's think about some big picture stuff. So, look, I think if that discussion's entered into in the right way, maybe even in a bipartisan way, you know, let's see the Libs and the Nationals throw up a few good ideas and be prepared to have them kicked around as well. I don't know. Look, I'm trying to be optimistic about this, Anthony. Let's have the discussion and let's have it try and have it in a normal, sensible way, I reckon.
Yeah, I agree, James. I mean, there's always cynicism around, you know, round tables and discussions and reviews and talk of things like tax reform, and none of it matters at all until you get to the end of it and decide whether you're going to do something or not. But what else is a government supposed to do, right? You got to kick off these things somehow, and I think they're making the right noises. So, you know, credit to them, and let's hope that something useful comes out of it.
Yeah, well said.
Let's get to our second topic, James. And this week we got the M&A deal of the year, a blockbuster $30 billion cash bid for Australia's second biggest oil and gas company, Santos. Now, James, having been shopped to every oil major and sovereign wealth fund for years, the Emiratis took the bait, turning up with bids at $8 and $8.60 a share in March, before returning with a best and final offer of $8.89 a share at the end of last week. James, the timing is stunning. I mean, we've just been talking about this Middle East conflict that could have a potentially huge impact on the oil price. Santos's board has acted pretty decisively and said, yep, good bid. If you can stand it up, we'll recommend it to shareholders. So the bidder, which is calling itself the XRG Consortium, but really most of the money looks like it's the national oil company from the UAE, and then there's private equity firm Carlyle as well. It's getting an exclusive look at Santos's books, and if it can stand the offer up, Santos is basically it's for the taking. Now, James, were you surprised that Santos's board could act with so much certainty given all the uncertainty in energy markets?
Yeah, good question, Anthony. I mean, I think so. As you said, they've been shopping this business around for the best part of, 2 or 3 years.
Yep.
They finally find a bidder with enormously deep pockets, willing to pay all cash, willing to just take the whole business in one chunk. Nothing, no funky sort of, structuring to this deal.
Yep.
I mean, surely you've got to say, yep, yes, please, we want to put this to shareholders. This is a deal that we think stands up. I mean, I think that's totally understandable. How does the Middle East conflict play into that? I think if you're on the Santos board, you'd be saying, look, there's plenty of conflict in the Middle East already. Hasn't really affected the oil price. And so they'll be, thinking, look, whatever happens here is probably a short-term issue. And, we've got to run our business for the long term. So I get that. But it's a really difficult one for Santos. They've tried so many things. They've looked at a merger with Woodside, the other big oil and gas player in this country. It sort of fell over very quickly. They've had activists suggesting breakup plans, come to nothing. So when you've got one bidder, as I say, with huge resources, ready to buy the whole thing from you in cash, I think that's pretty hard not to put that offer to shareholders, even though there is uncertainty in the world. There's always uncertainty in the world. But Anthony, we've got a really good question from a reader, Cheryl Cartwright in Victoria, and I'd like you to have a crack at answering it. She says, why can't Santos unlock its own value? Why is it better to have Australian resources in foreign hands, particularly the hands of a foreign government? I think that's a really important point Cheryl makes here. Santos basically becomes a foreign government-owned oil company if this deal goes through, right?
Yeah, absolutely. In terms of the first part of the question, James, Santos could, in theory, unlock its own value. It's one of those companies where the sum of the parts is worth more than the whole on paper. And Santos has been talking for years about doing stuff to unlock that value, James. Asset sales, infrastructure sales, farm downs, joint ventures, everything. It's had more reviews than the Phantom of the Opera would have had over the years. It is always just flooded with bankers trying different things. Whether its heart's been in actually doing something or not.
Yeah.
That's sort of another question. And why, James? Why haven't they been able to do anything? Well, it turns out that all those various assets that it's got, they're worth more on paper when you look at them by themselves, but they're actually not that valuable to other parties on their own. They might be a bit small on their own. They might be subject to preemptive rights or only attractive to a small player who doesn't have the cash flows to develop them. And oil and gas, James, it's all about scale. The big companies getting bigger. Santos is a big fish here, but it's relatively bite-sized compared to the other players globally. And its portfolio, it's quite separated, right? It's got a big stake in a LNG plant in PNG. It's got GLNG, which is LNG up in Gladstone. It's got other assets in Australia, the centre of Australia and WA. They're quite sort of separate. Now, each of those things on their own, sure they're big enough, but they're not that big. They're not that meaningful. So that portfolio being all over the place, those assets are too small for a big bidder like XRG just to pick off one or two. It wants the whole thing. So I'd say, Cheryl, Santos has been trying, and the method it's ended up with basically is just trying to get a bid for the whole thing. That's what they think's the cleanest. That's the value realization strategy here. It's the one they've got from the Emiratis, and the Santos board locked it in last weekend. As for the second part of the question, why is it better to have Australian resources in foreign hands, particularly of a foreign government? Cheryl, she has hit the nail on the head with this one. This is the question for the takeover. I think everything's going to live or die on this. James, you picked it up straight away in your first take column on Monday morning when this came out. The Foreign Investment Review Board, it's going to come down to FIRB, it's going to come down to the Treasurer. Countries globally, they're turning inwards. Governments are getting protectionist. This is an energy company. We still haven't worked out what our energy system looks like for the long term. How we're going to transition from the fossil fuels to the renewables. What's the likelihood, do you think, the government says, go for it?
Yeah, not great, probably. But I think there's one caveat to that. And just to explain the process, so the Foreign Investment Review Board, it gets first crack at reviewing a deal like this, and then it passes a bunch of advice onto the Treasurer, Jim Chalmers, who has the final sort of veto right, I guess you'd call it. So often the Treasurer would just say, thanks, FIRB, you've done a great job, tick. But I think this one, it really is going to come down to, it's going to be a decision Chalmers has to make. So the sort of immediate response is, no, we don't want these critical Australian assets in foreign hands, not only for national economic reasons and national security reasons, but for political reasons. Jim Chalmers won't expect too many high fives for a decision like that. The one caveat I've got, Anthony, is that we do need to get more gas out of the ground. Like it or not, it's the transition fuel that is the practical answer at the moment. So we're going to need more gas. And there is a question as to whether who's better to pay for that, the development of that new gas. Is it Santos as a standalone listed company that, has all those challenges attracting capital, or is it Abu Dhabi Inc. with deep pockets and lots of oil money that it's, more than happy to spend? So maybe there's a compromise where for Chalmers, where he does a deal where he gives approval conditional on the new owners investing a certain amount in unlocking new gas supply. That might be a way he can have his cake and eat it too. He can say, hey, look, I know how important energy and affordability and energy security is. I've just guaranteed that this mob's going to spend $30 billion on gas. I'm picking a number at random. $30 billion on gas investment over the next 30 years. That might be one way through it. But it's going to be a hugely tough decision, Anthony. The other thing, I mean, as you said, this is the third set of takeover talks on Santos that you and I have covered in the past decade. I mean, what is it about this thing that it keeps attracting bids? And what if this one falls over? Is there a bit of last chance saloon about this?
Oh, there definitely is, but it is so unique, James, for a top 50 company to have 2 bids in a decade, let alone 3 we're up to now. I mean, there's something quite magical about Santos. And like there's a few things going on, a few global forces and a few Santos-specific things. I mean, the first one is the cost of doing business in oil and gas, James. It's through the roof. You've got rising environmental regulations, you've got planning approvals, construction costs. It's just way more expensive to get a project up and running now than it used to be. That's making developers and producers like Santos' lives harder. How do you combat that? Well, one of the ways is to chase scale. So the bigger you are, you should be able to do things more efficiently. So we've got a situation where the big are just hoovering up assets and trying to get that scale to protect their margins. And then the smaller are sort of disappearing. At the same time, James, you've also got less capital around. It's that green sort of discount over these companies is really hurting. So some capital has fled the sector, or it's much more choosy, right? So companies, they now need to be able to fund their own developments rather than tapping equity markets to do it for them, or getting banks or a new investor or whatever. So you have to be big in order to be able to become the next big thing, because you need to be able to be big to have the cash flows now to fund the developments that'll be your next project. So the small end of the sector, it's just capital starved, and it's all about being big. Now, James, if you want to get big and you're an acquirer, there's not that many opportunities of scale around in good jurisdictions, and Australia's still one of them. There's just not that many assets up for the taking. And here you've got Santos, you've got a board that is repeatedly engaged with bidders, so it's clearly up for a deal with decent assets, large enough for someone like an XRG to take the whole lot and to make a difference. So there's sort of few targets. Santos is one of them. And then overlaying all of this, James, is that life on the ASX, it's not been that easy for Santos. Like I said, Santos has tried a few things to create value Most recently, it committed to return more cash to investors and be disciplined about its production growth. I mean, that's something that I've heard fund managers talking about for 15 years on Santos. It finally commits to do it. Does the share price go up? Not really. I mean, this thing just bounces around with the oil price still. So I think there's a few factors there, but Santos's board, I think it was about 8 years ago, got a bid from private equity. And at the time, the bid was good. It was a good enough price. But at the time, they had this new CEO, Kevin Gallagher, that had just come in. And the board kind of said, well, yeah, why should we take this private equity mob's money? Let's just back this Kevin Gallagher bloke to do his turnaround plan and make money for shareholders for us. And sure enough, they turned down the bid and they went with Gallagher. Fast forward to today, James, and Gallagher's probably closer to the finish than the end.
Totally.
And they don't really have that next executive up with the turnaround plan that could make them maybe want to reject something like this on valuation grounds. So yeah, it's pretty evenly poised. What's your gut feeling, James? What's the probability of success, do you think, in terms of this deal getting over the line?
Oh, great question. 50-50 for me. I really don't know, but I reckon 50-50, and I reckon we'll still be talking about this in 6 months. What are your numbers?
My gut feel, James, says that it's easier to block this thing than it is to accept it. I mean, every few years, for the past 15 years, we've had a big deal like this go to the Treasurer and get knocked back. We had ASX Limited, we had GrainCorp, we had APA Group, we had Ausgrid. They're rejected for various reasons. Could be security, national interest, but it's basically a combination of those two things. This thing, James, it's energy policy, energy security. We know that Australia's not been good at that. Like you say, perhaps there's a way forward for the ADNOC, the UAE company, to offer something to the government and the government to take it. And there are a few things it could offer. Like you say, it could commit to invest capital needed to unlock the Beetaloo Basin, which could be Australia's biggest ever gas reserve. Santos is a big player there. It could do that. It could commit to not take so much money domestic gas to feed into GLNG, which is then exported offshore. So there are things it could offer. But without offering those things, James, I just reckon my gut's telling me that this one will struggle.
Yeah. All right. Lots to play out. We'll come back after the break and discuss a deal that is happening, and it's one of the most exciting of the year on the ASX. Back in a sec. Welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday morning, the newsletter pulls together the best Chanticleer columns from the week and delivers them straight to your inbox. Very exciting day on Tuesday, Anthony, and not just because you're hosting the AFR's first insurance forum, which will be good.
Yep.
Hot sector at the moment, but on Tuesday, we have the first big IPO in a while, really. Virgin Australia is going to retake to the public boards by listing on the ASX. Now, Anthony, issue price $2.90, been very well supported, this thing. Is it going to fly or stay grounded? Will the shares finish the day higher or will they be lower on their first day of trade?
Higher. 5% higher is my guess, James. Look, this is a coming home party for Virgin Australia. The ASX is where it belongs. It's where it would have been if it hadn't have gone broke. It's where it used to be. So yeah, I think most investors are looking forward to seeing it back. It doesn't mean everyone's going to buy it. In fact, a lot more people won't buy it than will. But I think we'll get an okay reception. What about you?
Yeah, I think it's going to get a good reception. The only, I think 5% up is a good guess. It could get trumped though. If the Donald goes into Iran, oil price goes through the roof. Airline stocks are very sensitive to oil prices. Maybe that's the only thing that holds it back on day one. But the reception for this has been good, and it is great to see a big new business joining the ASX or rejoining the ASX. And then on Wednesday, Anthony, we get monthly inflation numbers. Inflation's looking pretty good around the world, so hopefully the good story continues, right?
Yeah, absolutely.
Well, we loved answering your questions during the episode today. If you've got a question you want to ask us, email us at Chanticleer at afr.com, and you can also send us a question in audio form. Just record a voice memo on your phone, include your name and where you're from, and email it to us. And of course, the widget on the Chanticleer articles at afr.com is always there as well. And I must say, Anthony, you don't need to be a family member of one of our journalists to get your question on, do you?
Absolutely.
All right. Well, it's been another big week. We'll see where Virgin goes next week. We'll see where the Iran-Israel conflict goes next week, and we'll see how markets do. It's a nervous time out there, I reckon, Anthony.
Yeah, I agree with you, James. Like you said, valuations are still high. Everyone's sort of holding on, just hoping that nothing too bad from the market's perspective sort of spills over.
Yeah, absolutely. It's going to be another big week. We'll see you next week. Thanks for listening. If you like the podcast and you want to hear more, consider sharing or giving the podcast a review, as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At the Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com, and you can subscribe to the Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thompson, and Anthony McDonald, and it was produced by Alex Gow with assistance from Mandy Coolin. Our theme is by Alex Gow. Head of Premium Content is Fiona Buffini.
The Australian Financial Review.